Hey everybody, Economic Ninja here. Got a great subscriber question. That is, what happens to our mortgages when all of this starts to fully unfold? And they are referring to an economic collapse or interest rates rising. So the good news is if you have an adjustable rate mortgage, nothing happens. Now, there is a caveat to that. First, I think it's incredibly important that you go read your mortgage documents. I know you did not do it. Just admit it right now. Just shake your head. I did not. Yes, I did not read the mortgage documents when I signed them, right? I was getting rushed. There was a lot of documents, okay? It's very, very important. Now, for like myself, I've done so many, well, I mean, honestly, I've done probably between, I don't know, 40 to 50 mortgages in my life, right? If I had to guess. That includes refis. I've been around mortgage documents a long time, so I get an idea what the different clauses are. I could scan through pretty fast, look for certain verbiage. The biggest thing is, the open boxes, looking to see what was filled in those, which boxes were checked, that kind of stuff. Go and read them. It's very important. If you have your mortgage documents and you want to make sure you actually still have them, okay? The copies of your signed documents. That's a really important one. That actually saved me in a case a long time ago because the bank couldn't come up with my signed documents. And so keep those, read them, and if they are a fixed rate loan, you're in good shape. Nothing can happen to you, okay? Now, if you have an adjustable rate mortgage and all of the sudden interest rates start to rise because the currency is collapsing in value and the government wants to, whatever government you're in, decides, hey, we got to bolster support for our currency and get other countries to buy our debt, then we got to raise rates. Well, that is severely going to affect your cost of living standards. And so you want to know what happens with that. Now, if you're referring to what happens if your bank closes its doors and defaults and all of that stuff, a lot of you go, sweet, I get my house for free. That's actually not how it works. It is a secured debt, which means it means something to not only the bank that issued you the money to go buy your house, but it means something to its creditors, the bank's creditors. So when a bank defaults and has to close its doors, guaranteed that loan goes somewhere else. And then it becomes either serviced by another bank or another bank fully purchases the entire debt, and then they take the payments and they get to reap the rewards of the interest. So that's why it's super important that you have your documents. So there's no confusion. Like, no, my loan is at this rate for this many years. I've already paid these many payments. That's if it gets really, really messy, which it could these days. You never know. There was some wacky stuff that happened in 2008, 2009 too. So nothing happens as far as your debt. It's still there. You still owe it. So, but I think this is a great time to stress the importance of why you need a fixed rate mortgage and why you need to have your signed copies, your documents that you signed in front of you, all right? Now, the blue ink copies obviously go off to the bank, but those do get lost, and those are very important. You need to make sure that you have yours in front of you, okay? Now, last thing, no, that's it. Man, I nailed this. 3 minutes and 30 seconds. This one's easy. You guys are out of here. Economic Ninja is out.